So is cash or accrual accounting better for nonprofits? We may not even know what those words mean, so let me try. Well, the most accurate set of financials that you can get are accrual-based financials. And accrual accounting actually captures transactions when they're incurred, whereas cash-basis accounting captures them when cash exchanges hands. So there are a few advantages to accrual basis accounting. First of all, it is the most accurate set of financials you can get because it's really a true picture of all the income and all the expenses that are happening for the period of time that you're looking at. It's going to give your leadership a very clear picture of the financial position and the health of the organization. So it's ideal. Also, it's an accounting concept that aligns with generally accepted accounting principles, for short, GAAP. And those are the highest standards in the accounting practice in the accounting world. And it's also going to be the accounting standards you're going to have to comply with at the point that you begin receiving a financial statement on it. I have more on that in another blog post, so check that out if you're interested. Now, the disadvantage to accrual basis accounting is that it's going to require more sophisticated staff and accounting system. Might be time to leave QuickBooks when you get here. There's a few workarounds and you'll improvise for a while, but eventually you'll find yourself wanting some more robust accounting software. So when should you start to think about an accrual basis accounting system? Number one, when you're required to have a financial statement by an independent CPA. If you are required, then you need to get started now on accrual accounting. Otherwise, it's probably inevitable, and it's good to start somewhere. In some areas that commonly make sense are going to be in your income area. So maybe you have revenue that comes your way via a grant, and the grant commits to a 12-month commitment that they pay monthly. Or they pay quarterly, but you really earn it monthly. Then you would use accrual basis accounting to book the amount that is due to you. It's called an accounts receivable, or in this case, a grant receivable. You would book it every month as an increase in accounts receivable and a credit to the revenue account, showing that revenue in your income statement for the period. And then when you collect it, the money goes into the bank, debit to the cash account, and a credit to that accounts receivable or grant receivable account. This will allow your board and your leadership to even see what's delayed, what's delinquent. You begin to use the balance sheet to see that accounts receivable balance, to know how large it is and how long it's been outstanding. So that's an accrual basis accounting opportunity that you might want to choose now. Another one would be in the area of expenses. Credit cards are commonly used. And so I really recommend that throughout the month that the credit card charges be recorded as expenses, coded to the budgetary accounts, and a credit to a credit card liability or credit card payable account. And then when you get your credit card statement, you would reconcile that statement to the amount that's inside of that credit card liability account to determine that all charges have been recorded in the financial system. And then when you pay it, that account would be debited and it would zero out. So that's a way of making sure all charges come in on your credit card or in your accounting system, and the full bill is paid at the end of a cycle. The last example that I think is common and good for most is that typically goods or services are received and we get an invoice, and that invoice may be, given at the time of service, but maybe a little later, or it may come and not be something that you need to pay for 30 days. And so you want to get to a place where you're recording all of the known expenses as they come in. So in this case, you would debit the expense budget account and you would credit the accounts payable account. And that accounts payable account would at any given time show all the invoices that have been received but not yet paid. And you would want to reconcile that list at the end of every month end close to make sure that the balance on your balance sheet for accounts payable is equal to actual outstanding invoices. Okay, so those examples would put you in a place of what's called modified accrual. So not full accrual yet, but you're modifying, you're not doing all cash, you're doing some accrual, and it could leave for later those things that get just a little more complicated, like inventory, prepaid expenses, and capitalization of fixed assets and depreciation. Save those for another day, but get started And I think accrual basis financials will help your board, help your leadership have a very true picture of what's going on in the finances.